right, so here's day 7 of my journey to a $500,000 stock market portfolio. All right, so today, what did I do? All right, so market Dow Jones was up 400 points today, so rebounded from yesterday. Sort of expected. I mean, these days, one day market's down, the next day it's up almost as many points. All right, so I rolled over some call options today in my RSP account. So I had Yeti that expired August 16, so I rolled it over at the same strike price, but at a different expiry date, September 27, to collect $1.50. So basically, that's a monthly return of $1.50 divided by 33, 4.5% return. I also rolled over my L Brands call option, so it was expiring August 16, rolled it over to September 27 at the same strike price of 26 for 75 cents. So that's a smaller return, but it's still a decent return of 75 divided by 26. So a return of 2.8% in 1 month as well. Halliburton went over 20 today, so increasing the premiums that I can collect, but it dropped back down and closed at 19.48. So I still did not sell a call option yet for Halliburton. Plus, anyways, I don't have enough buying power to buy more of Halliburton. So really my only option is to sell a call option either further out or just wait for the stock to come back up so I can sell a call option against it. So yesterday, if you remember, I sold a vertical put on the SPY. Basically, I sold a 277 put option and I bought the 272 put option, creating a vertical put spread. So basically, I collected $80 while risking $420. I keep the full $80 if the SPY stays above 277 come September 13. I lose it if come September 13 the stock is trading below 277. If it's trading below 272, my max loss is $420. So the difference between the strike, 277 minus 272 is 5, minus the credit that I collected of $80. So 500 minus 80, that's $420. So today, actually, since the SPY went up, I was actually profitable on the trade that I placed yesterday. And as you can see, I could have closed the trade early. So I sold it for 80, could have bought the trade back to close it for about 50 cents or $50. So I would have made a profit of $30. But of course, after commissions, which is about $6 going in and $6 going out, so it's about $12 commission. So I'd be left with $18 profit. Not really worth it. So a transaction like this really makes me want to consider a different broker. In fact, today I was actually strongly considering transferring to Interactive Brokers just because of their pricing, especially on options. I mean, if you look at their pricing on options, North America, I mean, it would cost 70 cents per contract, minimum order of $1. So for example, for this transaction here, it would have cost me $1.40 instead of $6. So with Questrade, this trade here cost me $6. With Interactive Brokers, it would have cost me about $1.40 or let's say $2 just to round it off. $2 in, $2 out makes a difference. But what really keeps me with Questrade is the simple platform, but most importantly is the fact that you can link your TFSA to your margin, increasing your buying power in your margin. So basically, with Interactive Brokers, if I have, let's say, 40,000 in my TFSA, then I have 40,000 in my TFSA. And if I have 10,000 in my margin account, it gives me a buying power of about 30,000 in my margin account, depending on which stocks I buy. But with Questrade, if I have 40,000 in my TFSA and I have 10,000 in my margin account, instead of having 30,000 buying power in my margin account, Questrade will use my equity in my TFSA to increase the buying power in my margin account. So I end up having more buying power in my margin account with Questrade. So that's more money that I can use to buy stuff and make money from. So the idea is that extra buying power that I'm getting with Questrade in my margin account, because it's linked to my TFSA, compensates for the commission or the extra commission that I pay with Questrade compared to Interactive Brokers. Although Interactive Brokers has a much lower interest rate on the borrowed money. So for example, if I have 40,000 in my TFSA with Questrade, it'll give me an extra 80,000 buying power in my margin account. Now, of course, if I use that 80,000 in my margin account, it'll be with interest. But at least I have that buying power to generate some sort of income or profit from. So that's mainly the reason why I'm sticking with Questrade, even though the commissions with Interactive Broker would be cheaper in my case, depending on the way that I trade. which is a lot of option selling. Now, if you're someone that does not sell options, you're basically just buying stocks. It's not going to matter, especially if you're buying and holding forever and never selling. If you're dividend investing, it's not going to make a difference really. But if you trade a lot, if you make a lot of trades per month, then it starts to make a difference. Then it makes sense to start shopping around for lowest commissions, because at the end of the month, that's a lot of money you're throwing away. In fact, for the month of July alone, I spent $515 in commissions just for the month of July. And so if I were with Interactive Brokers, I probably would have saved all these $5 probably would have saved all these $5 charges, the one-time $5 fee for getting into a trade. So I would have saved about $400 in commissions if I were with Interactive Brokers, roughly, because I'm just removing the $5 initial fee for getting into a trade. Because the price per contract after that is relatively the same. It's 70 cents with Interactive Brokers and 75 cents with Questrade, so it's the same. So it's really that initial $5 trade that makes a difference. So it's about $400 per month in my case. So now I have to justify spending that $400 extra per month. Does it make sense for me to stay with Questrade just to get an extra buying power, which comes from my TFSA? So if we look at my margin account, you can see that I've got 90,000 buying power because of my TFSA. So because of my equity in my TFSA, I get an extra $90,000 that I can use in my margin account. And in fact, I'm already using 73,000. So I'm already borrowing 73,000 in from my margin account, and that buying power came to me because of my TFSA. So basically, the income that I'm making from my 73,000 has to justify the extra $400 in commissions that I'm spending with Questrade. Now, some of my covered call trades, some of them generate 2-3% per month, some 1%, some 5%. So let's just say on average it's 2% per month. So if I take 2% times 73,000, what do I get? I get $1,460. So the income generated from the borrowed money against my extra buying power generated from my TFSA is on average $1,460. So if I'm paying $380 in commissions extra because I'm with Questrade, it would make sense. Now I should also consider that there's a difference of about 4% interest per year between Questrade and Interactive Brokers. So that's 73,000. I'm paying an extra 4% per year in interest. So divided by 12, it's about $243. So from the $1,460 in average profit that I can make from borrowing 73,000, I should remove the extra $380 in commissions that I paid with Questrade minus the extra interest of $243. So I'm still left with a profit of $800 for choosing Questrade over Interactive Brokers because of their main advantage of linking the TFSA to the margin account. Obviously, it has risks to link your TFSA to your margin account, because if you get placed in a margin call, you could lose your positions in your TFSA. The broker could liquidate your positions so that they can get paid. All right, so yeah, I just wanted to talk about my close call with Interactive Brokers, almost switching. In fact, I'm actually still considering it, at least maybe even for the RESP. I've got an RESP with Investor's Edge, CIBC, and commissions are too high, and I think I'm either going to switch to Questrade or maybe just switch to Interactive Brokers. Now, so going back to the rest of my positions, I actually had a chance to close Tesla for a profit today. As you can see here, I'm up $30 on the call side and almost $50 on the put side. So I could have closed the Tesla Iron Condor that expires August 30th. Could have closed it for a profit of $80, while my max profit is $125. So as long as Tesla stays between 260 and 205 come August 30th, I keep the full profit of $125. Otherwise, I can close out the trade early for a smaller profit. Right now, it can be closed for about $80. I'm actually thinking of maybe liquidating all my positions in my TFSA, because I find that individually they're not so great. I mean, Unit is doing well, but Teva is not doing well. NIO is not doing well. Mattel is doing well. I've got two Macy's. One of them is doing well. The other one is not. Kroger is okay. IMGN is terrible, of course. Halliburton, it was doing well. Right now, it's not. Grubhub is okay. FCX is not so great. Chesapeake Energy is not great. Bed Bath & Beyond is not great. And Afria is not great. So instead of being so diversified in all these small positions, I was thinking of liquidating everything and just going into a big name like Facebook or Nvidia or Apple and continuing with the covered call strategy, but with a bigger name. Because if you look at Facebook, for example, I mean, last week it reached 170. It would have been perfect to buy it then. But if, let's say I want to buy it at 188 and I want to sell a call option against it or go into a covered call trade. So this is 1 week. This is expiring this Friday. At a 187.5 strike, I could make a return of almost 1% in less than a week. So that's about 50% annually. If I go even, let's say, till September 20th, so about a month out, at a 190 strike, I can make a return of 4% per month, which is great. That's 48 or even 50% per year. So that's something I'm considering because all these small positions, I mean, it's better than having 100 shares, of course, in one stock. But if you're choosing a quality stock like Facebook, in my opinion, first of all, the premiums are much higher. So even if I have a bad month for Facebook, it drops, let's say, to 175, I can still collect weekly premiums that make sense. Because let's say I buy the stock at 188, but it drops to 175. Now I'm only going to be selling call options at a 188 strike. So the further you are from the market price, the premium will be lower. But because the stock is so expensive, to simulate this, let's say the stock dropped to 188, but I bought it at 197.50 and it continues selling call options at 197.50. Well, I would collect $50 at 197.50 or $100 at 195 while the stock is trading at 188. So even if the stock drops, I can still collect decent premiums by having a strike that's out of the money or a strike that's far from the current market price until I wait for the stock to recover. And $1 divided by, let's say, 198 is 0.5%, but that's per week. So times 52, that's 26%. This is something I'm considering. It depends on if I think I can recover the losses that I currently have with these positions with a few trades with Facebook. So if I look at my positions quickly and I put them in order of P&L, you can see that I'm down really big numbers here, 2,700, 1,400, 1,200. Yeah, I don't think Facebook's call premiums I can maybe get 500 per month with Facebook. So it'll take a few months to compensate for these losses. So yeah, I'm probably not going to sell these positions and accept the losses. So I've got a lot of options expiring August 16. So this is always fun because I get to either roll it over, get my money back and buy another stock. But I always enjoy rolling over the stock because I get to collect another premium, which I see as income. So this was a quick overview of my stock market portfolio today and what I did in trades. So yeah, since the general market is up today, so my portfolio went up as well. But I need to recover my losing positions for me to be truly satisfied. So if you have any questions, any suggestions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Also check out the other referral links below. Thanks for watching.